Welcome to the Critical Point Podcast on the stock market. It is May 11th. It's 9:33 a.m. Central Time. This is Rich Pawson. We're going to flip things around. Instead of starting with very short term, moving out to long term, let's start with the weekly chart. And we want to look at the bigger trends during the year, level 1, level 2. That's model output. And those are the most important trends during the year. Okay, now the level 1 is the most important and is actually used to track, follow time long term. So if you're looking for a long-term bottom or top, you need a level 1, and that's what may have occurred in March, that we may have put in 3-year cycle and 9-year cycle, minor, major business cycle bottoms, and we're in the brand new bull market into 2028 to 2031 for the next 9-year cycle top. The 3-year cycle will create the largest fluctuations time-wise and or price-wise along the way. Okay, now the thing is, this bull market could be very slow to develop. It could be a big roller coaster, a lot of choppiness, and we may not get into what most people desire for a bull market until late next year on into the following years. And it just has to do how long it's going to take to heal on this economic setback, how long is it going to take to get over this virus, whether the virus comes back many times, one more time, all the other complications can go along here. At any rate, let's take a look at these trends. And we know we went from a level 1 bottom, the model called it, it was earliest allowed, and it's been trying to top out for level 2. And this is the last week, ideally, to top out. I'll show you in a moment. It may actually be early next week here when we zoom in a bit here. But you can see it stayed within time or price objectives. It's overbought and it's rolled over. And by the way, this is the S&P 500 E-mini futures as a proxy to cash and as a proxy for the entire stock market. You can see we had some other objective studies that were more technical, and the market had respected those and starting to break out to the upside. Now, the thing is, it should decline in level 2, and I've changed some of these objectives things. Instead of drawing a box here, I'm not ready to really show much for actual price objective, so this just shows you time objective. And what it's suggesting is the market should decline into next week, which would be the earliest for a level 2 bottom, but it may delay into sometime first half June, the latest for a level 2 bottom. What this is telling us the amount of time it can take to get the selling out of the way, and sellers create bottoms. You have to get them to the point where they refuse to sell one tick lower, you don't get a bottom. Demand seldom can come in and turn a market on a dime. Sometimes shocking news will do it, but generally you just got to burn off that selling. Okay, now inside of this range, the model's already given us 2 other projections of when it can bottom. So it can come down, bounce, and then it only may retrace some because it's on its way higher, and away it goes. It may fully retrace for a double bottom test or even go still lower, and that's because either the market changes its mind and wants to bottom the latest, or we actually got news forcing it to, meaning we got some additional bearish news. Okay, so this can be a clue of what's coming at us for the direction of news, the bias of the fundamentals, or at least on a very short term, the bias of the news cycle, the day-to-day news. But it can also tell us what the technical people are up to, and we have a weekly indicator that is overbought, warning us it's probably time for a setback, and it's rolled over, working on a sell signal. I actually made a sell signal last week, but because it closed higher, I throw it out, or at least it's low confidence. Now, if it closed lower this week and maintained that, then we'd have an oops situation where it worked after all. I think it's a little bit early yet for this, but we should see a pullback in level 2 bottom. Now, the reason I was concerned that it might fully retrace and go to a new low for the year is this has been such a drama here this year that it kind of felt like this level 2 might have more of the bearish side of its statistics, its characteristics, than what we've seen in recent years. Normally, however, a level 2 really isn't that big a deal. You want to focus more on level 1. A level 1, in my opinion, definitely works better than a level 2 during a year. Level 1 probably works better than over in the commodities and some of the other markets even. So I'd rather be a level 1 trader than a level 2. But I kind of felt like, you know what? This can be such a choppy kind of market, or it could be even still a long-term bear market, that even level 2s can be just as important. So I've been working hard trying to find this top, or I should say I've been really watching the model closely and trying to see, is there anything wrong with the model? Do we need to tweak anything? Now I'm thinking maybe this market is returning to normalcy. It really only wants to decline a little bit into this level 2 bottom, and then it's heading higher in level 1. Either way, even if the market were to crash in the next few weeks, it would bounce for level 1. It just wouldn't bounce as high probably. I may not even get back to level 2 high. But if the market only pulls back some, if it just chops around, waits, meaning it wasn't valuable trading-wise, but it still worked, there was something going on, the market couldn't go up, okay, then it's going to move into level 1 high and probably go to a new high relative to this. So for the moment, I'm just saying let's kind of give it a chance that maybe it is going higher into late June, early July or something for the next level 1 top. So the level 1 buyer has been aggressive buying, but he may be backing off trying to buy a dip now and then buy some more on the level 2 to help push that whole level 1 higher. So I'm willing to be a bit of an optimist here, a bit bullish. I still got to deal with this level 2 that it's time for it to pull back. Hopefully this makes some sense to you, that we have level 2 buyers, level 2 sellers, level 2 buyers, and along the way we have the level 1 buyer, but the point is the level 1 buyer might help out that level 2 seller and that they pull back the demand a little bit and say, I've chased after this enough, I'd like to buy at least a little bit of a dip. And then keep in mind that all their thinking couldn't be changed according to their analysis as well as the flow of news cycles and fundamentals. We may be looking at bad news, then good news again, or at least some kind of optimism, even if it's bad news, okay? All right, let's zoom in here. As far as downside objectives, I still see a chance to go to 2,600. I don't think it's going to 2,500 lower as I previously thought, but that could change really any given moment, okay? This is still a bad year here data-wise, all right? What my thoughts are, it might rally to 3,000 first, and then I think it doesn't even go to 2,600s. It may only go to 2,700s before going higher, and it may go to 3,100, 3,200. Who knows how high it can go. This red line is not showing you an upside price objective. It has nothing to do with price. It's just simply saying the direction of price, okay, and the overall flow, and then the time to expect that price to top out and reverse. Let's zoom in. So we'll zoom in with a daily chart. So here's that level 2 uptrend. Here's the time frame for a level 2 top. For the moment, we believe it topped here because it's the highest price. And really, this is getting too late for a top, but the model's saying, well, not really. It could still do it, one last top. And we know from the Nasdaq strength, which I'll show in a minute, that really this market is just being propped up by the Nasdaq. And some think the Nasdaq's propped up by just very few stocks, and that worries them, okay? And by the way, the little setback we're seeing today is a level 4 intra-week swing that ideally bottoms this morning, that it's saying from 12 p.m. Central Time on into tomorrow, the level 4 swing should be up. Be very interested to see how well that works. It'll be interesting to see if the 5-day average actually holds here as support, and that this is just a little hesitation before going higher. And here's the thing, it's off a little today because of worries of the virus starting to kick up in Germany and South Korea and a few places once again. And our daughter actually works in South Korea, and she said, yes, they started opening up, but people got crazy, had to go out and party, and then some sick people wind up partying, and now they got some issues, and they're worried once again. Nevertheless, South Korea, Taiwan, and Germany have done a better job than the U.S. That's a fact, in my opinion. We have something to learn there. We're trying to reopen, but are we going to reopen too soon? And there's a little bit of worries this morning. There's also some variety of economic news and stuff going on. Mnuchin at the White House has come out saying he's fine with another $3 trillion being spent to fight this downturn in our economies here because the Treasury can lock in super low rates. Okay, and then on the flip side, there's been talk last week of people saying better buy Bitcoin. It could be the best inflation hedge. Inflation's coming back someday because of all the money printing. There's some truth to that, some possibilities, and I'll talk about that over time here on a long-term basis. But that doesn't mean we still can't have some problems in the moment. Not convinced we're going to rush on to that. Okay, so we have the level 2 uptrend, and we know for the Nasdaq it hasn't topped yet, but working on it. I'll show that in a moment. For the S&P 500, it may have topped, but it may top here in the next few days as the market bounces and takes out this high. So we know they've been buying all along, and they've stepped back at times to try to buy at a little lower price, and that's helped create these level 3 trends that are the biggest waves of buying and selling during a month. It's how we do business on a monthly basis, meaning there's people who actually trade this way. They bought, they sold, they bought, they sold, okay? And they found they couldn't push the market down much because this level 2 person, who's the type of trader, was willing to buy just a little bit of retracement. They wanted to keep buying. And so they were fighting the larger trend. And they were helping the larger uptrend, therefore making it move up at a faster pace because there was more types of traders actually buying, okay? Now the thing is, we got a daily stochastic overbought warning it's time to go down, warning they could back away again, warning we can get one of these level 3 downtrends because this indicator is optimized to help follow that trend, okay? But here's what the model's forecasting. It's saying it really shouldn't top today, at least. It shouldn't top to May 13th earliest and may not top to the start of next week, say Monday or Tuesday next week. Ideally, I think it's going to top this week, however, but we'll see, okay? At any rate, so it's already made an objective here, May 13th on into next week, and it's coming into the maximum for this L2 time. So I think we're getting very close to level top if it's not here. And I think the key is the Nasdaq need to top it out. It's simply too strong in my opinion, number one, but it's been strong enough to actually hold up the entire stock market, I think. Okay, and there is discussion of that, and there is those who are worried of that. All right, so a little more up, and then it's coming down into a level 3 bottom, which would be the earliest for the level 2 as we discussed on the weekly chart. And I think it really comes into next week. It's really going to be a little bit of a rule violation, a type of rule in it, that it shouldn't bottom this week for level 2. It ought to be next. So down in this, and so it's telling us how many days. The market can go up 2 to 5 more days, and that's how long it should take them to have bought enough and at least got to get a level 3 pullback, even if the market's going higher in the summer or the rest of the year. Should still get that pullback. That will tell us how many days into next week. And then we'll probably get a bounce the following week, another decline the next week we're following, and that's probably actually going to be the latest for the level 2. It probably won't wait to the absolute latest, okay? And we'll reevaluate that. So what do we have for upside potential? Well, I still think the bulls are probably eyeing the 100 to 200-day moving averages around 3,000 for the S&P 500 futures. Cash is going to be within, what, 10 points of that, 10 handles. Okay, so at any rate, that's what the forecast here is. Give this a little bit of time, that they're probably going to buy this later today and tomorrow, and give a little more time for this level 3. And then we'll see how this is going to relate to the Nasdaq. As I close this out, let's take a look at Nasdaq. You can see we had 3 price levels. You could see the market respected those, traded around those, and has since violated and set up a new upside objective of 9,400s to 9,500s. And then, of course, we have the high of the year going back into the 9,700s. Its stochastic is starting to get towards extremely overbought. Not quite there, but very close. It's still acting bullish, and it's still acting stronger than the other markets, in my opinion. Got the 5-day average as nearby support. We got a former upside objective that was resistance, may now become support. And likewise, it's saying you at least want to give it into tomorrow, meaning it may top ahead of the S&P 500 actually, but it's more likely going to be May 13th and later for the L3 top. And we already, even though we're showing an L2 back here, we want to give it one last chance that the L2 actually occurs here. If we get very little downside and the L2 decline doesn't work, we'll probably learn, yes, it topped earlier and the market has every intentions of going higher into late June or July. So there's complications here. It may be this market wants to be bullish into late June, July. I would think we'd at least get some kind of hiccup for a pullback in the next few weeks for level 2. And I think that might be a decent buy. And then we're going to have to worry for the next level 1 downtrend in July, August. That could be where the more important bearish information comes. That could even relate to, hey, the economy is now open, the virus is over, okay, and we want to see, but the market is too high priced relative to the economy. It's got to come down some as the economy also catches up. The two kind of merge. We'll see. Lots of twists and turns here, but like I say, I'm going to actually probably back out of some of my buying, even though I want to try to hang on to something long term. I'd like a little better position, and I'd like some profit in the account to actually use for stops, for even wider stops, bigger cushions here. By the way, over the weekend, I created a very simple quantitative model for virus cases in the US, and it's suggesting an upswing in cases this week. We'll see how it works. Now, it may only be a small upswing, and that larger trend is rolling over and down, and there's not enough data. I don't know how many trends we can actually isolate to help out here. We'll watch that. But anyways, this morning there was news that yes, Germany, South Korea ticked up as well. And I'm wondering how that'll play a role. We'll see if the U.S. Ticks up as well. Something interesting to watch from this quantitative concept and analysis. Manage your risk relative to analysis of others. Have a great week. Like I say, I fully understand why some want to be bullish for quite some time here, but I think we should have some corrections along the way, and hopefully I'm going to catch one of those, and hopefully it'll be useful. Thank you.